You open the envelope thinking it is routine homeowner mail. Maybe boring. Maybe something you skim after coffee. Then you catch the words assessment notice, fair market value, and tax year, and the whole room changes temperature. Nobody kicked in the door, nobody yelled, but somehow a county office just walked into your budget and moved the furniture. That is the special kind of panic property tax mail creates. The letter is not dramatic, the effect is. You bought the house, survived the closing costs, learned the mortgage, accepted insurance, tolerated maintenance, and finally convinced yourself the monthly pain had a shape. Then one notice arrives and reminds you the number is still negotiable, just not by you. The phrase that hits hardest is not even a scary phrase. It is assessed value. Official language for, this home now counts as more money, which means your life may now cost more money too. The first insult is the tone. Property tax notices never sound like disaster. They sound educational, informational, neutral. They tell you this is not a bill. They explain timelines, valuation dates, hearings, appeal windows, parcel details, maybe a website, maybe a polite sentence about local services. The language is civilized, your nervous system is not. Because when a local government says the property value changed, your brain does not hear process. Your brain hears monthly damage. You start translating everything into the budget categories that are about to get thinner. Savings, repairs, food that is not from the freezer. The tiny flexibility that keeps adulthood from feeling like a punishment simulator. And that is why the notice feels personal. It does not arrive as a theory about municipal finance. It arrives as an official reminder that home ownership is not one decision. It is a subscription to future surprises. What makes reassessment panic so nasty is that it attacks the one story homeowners desperately want to believe. At least the expensive part is known now. Mortgage, insurance, utilities, repairs. Painful, yes, but visible. Property taxes break that illusion because they sit inside the housing stack while still feeling slightly outside your control. A lender does not send this notice. A county does, which means it can feel like a second authority over your home, your payment, and your future. So you do what every stressed homeowner does. You stare at the house differently. The same kitchen now looks taxable. The same yard looks taxable. The same neighborhood that once felt reassuring starts looking like evidence that the government has noticed where you live. That sounds irrational until the numbers enter the room. On April 3, 2025, ATTOM reported that single-family homeowners paid $382 billion in property taxes in 2024. The average tax bill came in at $4,172 per home, up 2.7% from 2023. That is not a rounding error. That is a recurring hit attached to the address. ATTOM also said the average effective tax rate for single-family homes in 2024 was 0.86% nationwide. That sounds manageable until you remember averages are polite. Some counties and states are much meaner than the national mood. A reassessment in the wrong place does not feel like paperwork. It feels like your housing cost just discovered vertical movement. Then there is the local shock. Fairfax County, Virginia said on February 21, 2025, that average residential assessments for 2025 rose 6.65%, or about $52,000, compared with 2024. Fairfax also had to remind residents that the assessment notice is not a tax bill, which is useful information but emotionally hilarious. Because if the assessment goes up hard enough, most homeowners already know where the conversation is headed. That is the trap. The notice does not have to be the bill to still ruin your evening. This is where the psychology gets ugly. When your paycheck stays the same but your property value gets reinterpreted upward, it does not feel like your asset improved. It feels like your life got repriced without consent. People talk about appreciation like it is automatically good news, but appreciation only feels romantic when you are selling, borrowing, or bragging. When you are budgeting, appreciation can behave like an expensive compliment. And unlike flashy market headlines, property taxes hit the boring core of life. Not the fun category, not the fantasy category, the shelter category, the bills you cannot ignore category. So the reassessment notice lands with a kind of bureaucratic disrespect. It politely informs you that your home may be worth more while quietly threatening to make staying in it feel worse. That is why homeowners get angry at envelopes. At this point, you immediately search the one word that feels like oxygen: appeal. Maybe the value is wrong. Maybe they used bad comps. Maybe the square footage is off. Maybe somebody at the assessor's office finally meets the one homeowner who actually reads the notice closely. And sometimes appeals do matter. They exist for a reason. But psychologically, the appeal search is often less about process and more about trying to reverse the emotional violence of the letter. You are trying to restore the previous version of reality, the version where your house cost what you thought it cost last week. So, yes, you check deadlines, you review comparable sales, you read the county instructions, you look for exemptions, caps, homestead rules, and timing. But the deeper problem remains the same. Even if the notice is technically informational, the household has already felt the impact. The fear gets there before the final bill does. Now the rest of the housing stack starts vibrating. If taxes rise, the escrow math changes. If escrow changes, the monthly payment can change. If the payment changes, the emergency cushion gets smaller. If the cushion gets smaller, every repair becomes more offensive. Suddenly, the dishwasher, the leak under the sink, and the car that needs tires all start looking like members of the same conspiracy. That is when homeowners stop talking about property taxes like a civic contribution and start talking about them like a structural threat. Because the real fear is not one higher bill. The real fear is that your housing cost can keep evolving while your income does not volunteer to evolve with it. And once that thought enters the house, it is hard to evict. So, in the morning, you treat the notice seriously without letting it narrate your whole life. You read exactly what changed. You check whether the number is assessed value, taxable value, or the projected tax impact. You learn the deadline, the appeal path, and the rules that apply where you live. If your area has caps, exemptions, or homestead protections, you stop guessing and confirm them. Most important, you stop pretending property tax is some side expense floating outside the real cost of ownership. It is housing, real housing. If it can change your escrow, your monthly cash flow, and your stress level, then it belongs in the same mental category as the mortgage itself. Because financially, that is where it has already been living. You thought the house was expensive when you bought it. Then the county mailed you a reminder that ownership is not just what you agree to pay. Sometimes it is what the address keeps deciding to cost. Welcome to StatPsyche.